Welcome to ShortView Trading. This is your morning market hit for Wednesday, 6th of May. What matters today for traders? Well, clearly it was a good day for the bulls yesterday with the S&P and the Nasdaq both rallying on the session. The S&P was led higher by healthcare and tech sectors. Having said that, they both still remain very much within their range of recent couple of weeks. As you can see from the S&P Fibonacci chart in front of you now, the index is still below its key Fibonacci 61.8% retracement level. The Nasdaq, the situation is similar, with a slightly higher retracement level acting as resistance. But the interesting point about this market is the structure of the rally. It's been very narrow in recent weeks. And we see that if we look at the FANGs index, which is back at its February highs and has become somewhat overbought in the short term. These stocks have been leading the charge, whilst the signs from the cyclical indicators across the globe have really been pretty poor. Indeed, the S&P Airlines Index made a new closing low yesterday. 10-year bond yields have remained pretty much on their lows as we've been talking about in recent trading sessions. Globally, banks remain weak. The price action in the bank sector is poor. Italian and Spanish banks, for example, are pretty much on their lows. The rally in the global banks index has been tepid, and indeed other classic cyclical indicators like commodity prices have looked pretty soft in the last few days. Look at aluminium, for example. So the cyclical indicators are not confirming an expectation of a global economic rebound that's going to be sustained. Indeed, they're questioning that. And the rally in the market's been very narrow in recent weeks and led primarily by tech. And that questions its sustainability. Added to which our short-term models continue to roll over, as we've been talking about in recent days, whether it's risk appetite scoring system or the short-term technical scoring system, or indeed a put-to-call ratio. None of these have a positive message for markets. All of them have been rolling over in recent trading sessions from sell signals. And as we've been highlighting, medium-term 1 to 2 month models are also back on sell in increasing numbers. So we remain cautious about this market. Clearly, the shorts are being bullied, but we'd favour the short side from here on out. For full details on how we're playing this, please see today's Daily Rag, available to subscribers and on the website. So what are we watching today? Well, of course, all the usual factors: signs of financial stress, easing or tightening, any further policy announcements if they are forthcoming, and indeed the price action. But in terms of key global macro, we're focused on service sector PMIs coming out across the world, particularly in Europe today. US ADP employment figure will be interesting. This is the precursor to the non-farm payrolls on Friday, as well as one or two other bits and pieces of macro data. A couple of key speeches out of Fed governors as well, and of course a continuation of US first quarter earnings. General Motors in particular might be of interest today. So that's it from us. That's your morning market hit for Wednesday, the 6th of May. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Twitter and or Facebook. Thank you, stay safe and trade well.